Hey everyone, this is the seventh lesson of Ethan Trade Stocks. Today, we'll find the right stocks for your portfolio and configure your stock graphs and charts. Risk tolerance. It's how much money you're willing to lose in a single trade. You should only invest or day trade with the money you could afford losing. Day trading is for people with higher risk tolerance because the price fluctuates so much in a day. You could lose a ton. And investing, it's for people with lower risk tolerance. The investing stocks are usually bigger stocks or things that don't change so much per day. And something to note is that losses are inevitable. They always happen in day trading or investing. And you should know that it's a part of the game. Stocks for your portfolio. Based on your risk tolerance, you can assess if you want to day trade or invest. Within investing, you could buy a company like Apple, which is very well known and stable. On the other hand, you could buy a small startup company. The appeal to these smaller companies is that their stock price potential gain is a lot higher. But on the other hand, so is their risk. This is a Yahoo Finance chart. You could open up a chart of your choice. There should be an indicators button. Here, it's on the top left. And you can click on any indicator you like. And it applies it for you. There are some essential indicators in trading. The most three common used ones is the moving average, the Bollinger Bands, and the relative strength index. And we'll talk about those three today. There's the moving average, or the MA, and the exponential moving average, which is the EMA. The moving average smooths out the stock chart by averaging the price over a certain period of time. It helps the trader understand the direction of the trend and find out entry and exit windows. Investors use a 50 to 200 day moving average. The exponential moving average gives a higher weight or significance to the more recent prices of a stock. This is great for day traders, and they usually use an 8 or 20 day EMA. Something to be careful about with these moving averages is called the whipsaw, and it's when the price constantly dips above and below the moving average in a very short period of time. Since a stock going above or below this line conveys a message to the trader, a stock moving above and below can cause many opposite signals, which will confuse the trader. They don't understand it. If they will buy or if they will sell, it's really hard for them to understand that. The Bollinger Bands. They are volatility bands above and below the moving average, usually the 20 MA. The bands widen when volatility increases and constrict when volatility decreases. When a stock price goes above or below the bands, it signifies a good time to buy or sell. So this is telling you if you should buy or if you should sell. It's a very useful tool. The relative strength index. It's a momentum indicator that ranges from 0 to 100. It shows if a stock is overbought or oversold. A rating of over 70 means it's overbought, and under 30 means it's oversold. A rating above 50 means the market's in an uptrend, and below 50 means it's a downtrend. So this is really showing you, this is helping you predict the future of the stock price. And you can see it, it's this yellow line right here. And you see that it's at 58 right now. And you can see that it can go all the way up to 100 and it goes all the way down to 0. So this is the line of that, and that could help you predict this stock price. Thank you so much for watching. I really hope you learned something and you enjoyed this episode. I really enjoy making them. Please come back for the next one.